And 2 weeks ago, everybody was talking about the idea that the reflation trade might be reversing. Lo and behold, we have this big risk-on rally for stocks. What's going on here?
I know, it was pretty interesting. We got to see VIX actually hit 15, which everyone started worrying about. And you could start to look at the underpinnings of what's happening in the options market, not only in VIX, but also VVIX, which is the volatility of volatility. We've seen it compress down to around the 75 level. It averages about 86. So when VIX comes down to where it is right now, about 10.5, and you start to see VVIX bottom out here around its lower end of the range, that starts to show you that VIX is really complacent and may actually revert back to its normal averages. Now, during this year, we've been trading between 10 and 12, so it may only go up to 12, but still that would be a 15% rise. And we saw VVIX crash about 20% from Friday to Monday.
It's interesting that you're saying that, actually, because we were looking at a chart of the VIX before, and not surprisingly, gap down, the inverse of the averages gapping higher. And it seems that these gaps fill, so perhaps it will gap back up to fill toward that average. So sector-wise, what's happening beneath the surface?
Yeah, when you start to scratch the surface, people still are focused on earnings. And if you look at consumer discretionary, they're going to be coming up soon, especially the big leaders in there, including Amazon. And we're starting to see the volatility there is around 12. Today, we saw a big block of a 5,000 contract for the May 5th expiry on the nearest strike, which is the 90 call. You saw a big buyer, so you're having 17 times the amount of calls being traded versus puts. So that's very bullish. People are actually anticipating Amazon to lead it higher.
Does that ever set up, from a contrarian standpoint, when everybody is bullish or most people are bullish, does that set up the possibility of some kind of negative surprise in your view via your work through the options?
No, I think because volatility is so low here, and at 12 of the VIX for the consumer discretionary, that this is a cheap way to actually get upside with de minimis downside risk.
Well, speaking of upside, let's get to your trade on Amazon, which I believe is bullish.
Yeah, this is directly for earnings, so it won't cost you anything. And with Amazon here around the $905 level, you can sell an $892.50 put. Use that to finance a $910, $950 call spread. So it won't cost you anything. So you can participate to the upside. And if you were just going to buy the stock here, you would actually have to spend about $905 on this. It's not going to cost you anything. And actually, you have protection down $892 range. So you would only have to get long there. So it's a great way to participate in the upside with negating some of your downside risk.
Well, there aren't many things in life that don't cost us anything, so you have to like that one.